In this video, I want to show you how to use money management algorithms to time better entries into a strategy. The strategy that I'm looking at is AT2020. So if you look at this strategy, AT2020, what it's done in the past year or so, let's back to January of 2020, hasn't done a lot. You know, it's been kind of sideways, had a strong year into July of 2020, but since July, you know, it's kind of been sideways and break even overall since January 2020. And one of the things you see on these shorts is or even on longs, is as soon as you get in, the market completely reverses. And so you see that in today's trade more and more. And sometimes you see that as a 1 year deviation. But I'm going to show you how to use money management algorithms to test a better entry, to get a delayed entry. And then over the past year, the results look more like this. You have fewer trades. And you're timing that entry. So, for example, the original strategy right here gets in, has a $700 stop loss. As soon as you get short, boom, the market just fires and rallies, and then it rolls over. Same thing here. You get short, boom, it rallies, and then you get a little bit of profit. Then it comes and break even stop. Same thing here. Strong sell-off, boom, counter trend rally before it rolls over. Big counter trend rally. So the low here in the first 15 minutes is 12,998. The high here is 13,157. $3,000 per contract. You get a $3,000 counter trend rally in the mini Nasdaq. Here, you get long. You're long the Nasdaq. Boom, it reverses. Boom, slam, stops you out. And then same thing here. You get short. Boom, it rallies. Any harsh selling just gets a massive counter trend rally. So you need a delayed entry in the current market environment. How do you set that up? How would you do that with the money management algorithms? I've done that down here. It doesn't capture all trades. And so, because not all trades do have a big counter trend rally, but quite a few have recently. And I'm going to show you the settings. So to do this setup, what I do is I format the strategy. Since it has a $700 stop loss and a $450 break-even stop, I'm turning those off. So I'm turning off the stop losses, I'm turning off the break-even stops, and I'm just using the fixed entry signal. I'm not trading this, I'm just using the fixed entry signal for the money management algorithms. So the money management algorithms look at this chart. And so I'm going to show you that. Let's look at the results here. You get a little bit better results when you do that. You see $5,000 in profit. But a $20,000 drawdown. Here's the equity curve. And so it's not really something you want to trade either, but what could you do to get the results right here? So if you look at this performance summary, much better. And simply what we do, and on the short side, it works really well. You see how to short this market since July by using delayed entries. And so these last two trades, for example, right here, they're originally stopped out with our break-even stop or with our stop loss. And so what you would do, instead of getting short right there at 13,486 on this trade, this is actually on 2-3. So let's scroll. These two trades are actually right here. So you're talking about January the 27th. Instead of getting short here and then during this massive counter trend rally, you wait for the market to come back a little, and then you short it. Same thing here. In the past, this hasn't worked as well. In the past, it's more counterintuitive, where it's a gap down, market goes down, and if you wait for a counter trend rally to short it, you miss the trade. Historically speaking, for many years, you miss that trade if you wait for a better entry, because it's hard to maybe short a gap down and then the first 15 minutes of weakness. But that has been a good trade historically. But in this market environment where the dip buyers are so strong, a gap down, a strong sell-off, boom, it gets a $3,000 counter trend rally. So what do we do here? Go in here, you format the strategy, look at the money management algorithm that we're looking at, and it's at NQ. We're looking at NQ 15-minute bars, and we're using the pinpoint entry algorithm to get in a better price. And we're simply, see all these other rules, there's a lot of parameters here, but when you see 0, that means they're not being used. It's a rule that's not being used in our money management algorithm. And I do have a revision 8 of this as well for special charts like case bars, but I'm only using the pinpoint entry algorithm, and so the pinpoint entry algorithm parameters, see the parameters for the rules are here, but keep in mind only the ones with 1 in front of them are being used. So Rule 6 uses a $2,000 pinpoint entry loss. So it waits until the original strategy is at a $2,000 per contract loss before it gets in. And so you scroll down here, look at other parameters. Your max daily entries is 1. You'll enter trades between 9:30 and noon on the long and the short side. And you'll exit at 1,600. The stop loss is $1,200. So your stop loss is $1,200 instead of $700. And all the other parameters are false. You don't sync the exit with the master. And so those are the parameters that we use. And you can see here, you take fewer trades, but you get in. And so historically speaking, this won't generate many trades. If I backtest this further, it won't generate many trades because there's not, historically you don't see a lot of markets that have $2,000 counter trend rallies prior to the recent market environment that we're in. And so it kind of goes sideways with very few trades. But just take this trade for example. I'm going to turn on pointer tracking in TradeStation. And if you take a look here, instead of going short at 32.31, this gets in at 32.4850 or 13.34850 instead of 13.23150. So at least it places a limit order based on the closing price once it's at a $2,000 or 100 points, at least 100 points plus a limit order. And so then you have a $1,200 stop loss, and you have plenty of room because once the market rallies that much, then it's exhausted, and then it can roll over again if it's going to roll over. There can be complete reversals as well, and the trade can still be stopped out. Same thing here. This trade right here, it doesn't have it missed this trade because there wasn't a $2,000 pullback. This trade was missed because there wasn't a $2,000 pullback. And so on. This trade was missed over here off the chart. And so you don't get as many trades. You only get those trades where there's just massive tear your head off counter trend rallies. 13,141.75 is where it gets in versus 13,015. So it uses 100 points plus a limit entry on the close, and you get a great entry right there. And so those are just 2 trades. Let's look at the other trades. Let me turn off pointer tracking so I can move around on this. And so let me turn that off. And so let's go back and look at some other trades. So here's some other trades. It doesn't always roll over, and you exit at the end of the day. Here's one that doesn't exit. Here's one that does a very good long trade, and that is on 11.23. Let's scroll back here to 11.23. You miss a lot of trades, but you're getting. So here is an example. 11.23. Instead of getting in here, you get in down here. And so you get that bottom in this case. On 11.9, let's scroll back to 11.9. You see this trade right here? It was profitable on the original strategy, but it had a big counter trend rally right here. Actually, it would not have been profitable because it would have. This is without the stop loss. I took the stop loss off. It would have been stopped out with the $700 stop loss. As soon as you got short, it would have, boom, rallied and gotten stopped out. So it's almost as if, they look for strong selling at the open, and if you get it, boom, they fight that. They're out to punish you and tear your head off if you short it after a strong selling after the first 15 minutes. So you have to, if you want to short it, you can wait until there's a strong counter trend rally right here once again. And so this is how I use, this is the same date, 11.9. So if I want to line them up, that's what it looked like. So the next trade, you have a stop loss here. This was stopped out too. So nice trade here, 12,228.50 and 12,825. So huge 400-point gain right there in that scenario. So this is a quick way, to test strategies for delayed entries to get in at better prices. You could then maybe go back and reprogram your strategy if you wanted to, or just use the money management algorithm to trade it. But this is an approach to take. Here's some more trades here back on 1012. 1012 right here. So see here, big gap up. Looks like a great short. In hindsight, it doesn't look like a very good short because it's a blow off market on 1012. But if you get gap up, typically the ebbs and flows will have it come back some. But it becomes a blow off market here. And so anyway, this one is stopped out on 1012. On 1013, some strong selling at the open, even though there's further gap up. So you've had 1 gap up, 2 gap up, 3 gap up, 4 gap up, 5 gap ups in a row, and it just kind of keeps going. But the way to make this one profitable is to wait for this delay. So you get in at a better price, 12,153.50 instead of 12,044.75. So we showed you the winners and losers in this setup. And when you take the original AT 2020, turn off the stop losses for break even and stop loss, and apply a money management algorithm to get in at a $2,000 better entry price back to since the pandemic, since the Fed acted and supports this market. You can still short it. You can still short this market using this technique on AT 2020.